3-year period, एक साल बीच में आएगा जब आप नहीं perform कर पाएंगे. Every scheme has it, but over a 3-year period, if you are not able to do, then there is some serious changes that need to be done from from your investors and for your investment perspective.
Hi Anirudh.
Hello, Vikas. How are you?
All well.
Thank you for having me.
Yeah, once again, thank you so much for joining the call, Anirudh. And yesterday, it was a music to my ears when I heard a lot of different perspective from you in terms of how did you manage to focus on the quant investing, etc. So we'll deep dive the whole thing today. So thank you so much for giving us time. So there are few investors who have joined today and they were not there yesterday. So let me introduce Anirudh first, and then I have set up questions for Anirudh which I'll be asking. So Anirudh Garg is a partner and head research with a belief that technology is the only solution to overcome the emotion of greed and fear in the market. Anirudh headed the research and coding team. And I use this word, how did you manage to crack the code? And this is the coding team that he could manage to deliver, and I'll come to his performance in a while. That developed INVASSET AAID. Now AAID is advanced, it's nothing but advanced algorithm for investment decision. It's a kind of investment framework, which is an award-winning proprietary-based framework at INVASSET. So he's a bachelor in business studies from Sahir Sukhdev College of Business Studies, Delhi University, and masters in investment management from ICMA Center, UK. With 15 years of research experience in the stock market, Anirudh is actively involved in managing a prop desk of close to $20 million and a PMS public money, which is about $10 million. So congratulations, first of all, Anirudh, for doing a fantastic work at INVSS. And thank you for accepting the request. Over to you.
Thank you, Vikas. So first of all, thank you for having me here. And I was just wondering what amazing bull markets are. The figures that you were mentioning, that a prop desk of $20 million and a client wealth of $10 million. So just you must have updated it like a year and a half, 2 years ago, on our website or something. So I think we need to update that as well, because we are managing around $40 million of client money and around $40 million of prop desk. So yeah, that is the beauty of the bull markets. More AUM comes, the more you are able to run for your clients, and the funds and the management, the assets and the management, they become bigger by the time. Yeah, so cheers to all the bull markets in a developing country like India. I think we are lucky to be born here at this time, and let's all together, as an investment fraternity, make the maximum out of it. What was the question?
Yeah, so one request, if you can come closer to your mic because your voice is echoing. And are you there in the Google Meet of ET team? If you are, then please come out of that because your voice is echoing.
Google Meet, let me just check once again. No, I'm not there in the Google Meet. Is the voice echoing right now?
Yeah, much better. Yeah, if you could speak a little bit louder for a benefit of our audience.
Yes, absolutely.
Yeah, great. So we'll have to correct the numbers because you have delivered triple digit returns in last 1 year. So number would have doubled up, Anirudh.
Yes, absolutely. Thanks to the market.
Right. So my first question to you, Anirudh, is that what led a traditional fund house? Because as a family and as a PMS house or as an organization, you've been investing in equity markets for over 25 to 28 long years. And I had a chance to speak to Mr. Garg directly 2 months back, and where he shared his valuable wisdom with me. So, what led a traditional fund house to start focusing on quant investing particularly? And how was INVSET, which is your framework, AAID, your proprietary based framework, how did the whole thing got conceptualized? Over to you.
Okay. So because we started, my father, Mr. Rajesh, he had started this business. He has a passion for equities. He's a chartered accountant and a company secretary. And back in 1992, he got a ticket for Ludhiana Stock Exchange, a broking ticket for Ludhiana Stock Exchange. And, it was our entry to the investing world. And he has been doing pretty well. He has compounded his meager capital of 1 lakh rupees at the 28% plus stagger over the years. And I believe today has reached handsome figure that by God's grace I am managing today. In 2010, we did a research. We built a research team. It interviewed a lot of fund managers and retail, and there were some common behavioral facts that we noted that today serve as the four pillars of INVASSET. The first one, Vikasji, was that we met a lot of intelligent, super intelligent people having so much knowledge, but totally lost, the interest and the confidence in the stock markets. Why? Because either they lost their capital or they lost the capital of their clients. Yeah. So one thing is sure that capital is the only real thing in the market. You have to preserve your capital at all costs. So whenever, how does it help? So whenever you are given a decision where you have to choose between a high risk, high return, or say a low risk, medium return strategy, you always choose the later. Yeah. The second point was that if you're not able to outperform the benchmark over a particular period of time, for us, maybe 3 years. 3 years is a pretty good time. If you're not able to outperform the benchmark, then you're all investors. You should not manage people's money, and then you should not manage your money as well. You need to go back to the drawing board and look for alternative sources of investment. Yeah. Over a 3 year period, एक साल बीच में आएगा जब आप नहीं perform कर पाएंगे. Every scheme has it, but over a 3 year period, if you are not able to do, then there is some serious changes that need to be done from your investors and for your investment perspective. The third thing that I've noticed with even the biggest of the fund houses is that due to the overcommitments you give, the way you shape your mind in a particular way, you form biases. I will not do PSUs. I will not do, I will not do PSUs. I will only do pharmaceuticals, FMCG. Yeah, I will do old new economy. I will not do old economy. Markets does not have time for this.
Yeah, free mindset.
Yeah, market is always a game of valuation and relative change. One thing becomes expensive, the other gets better, then the other performs, this goes for a rest. It is a continuous process that is going on. You cannot be biased to a particular set of investments. From 2010 to 2020, we were just holding new economy. We were holding everything from Eicher Motors to pharmaceuticals to FMCG to IT to Bajaj Finances and all. They were wonderful companies. But we as their holders, we are not married to them. We have to tell that, okay, now these stocks have become expensive. Vis-a-vis, the other stocks have a lot of relative change working for them. बहुत सारी चीजें improve हो गई हैं over the time. This transition that is there is very necessary in the stock market. And one should have a system to, identify it at the earliest possible point. Otherwise, you may have seen a lot of fund houses now joining in, and the ones that never used to invest in old economy now opening old economy funds. So market तो आपसे करा ही देगा, आप time पे करते हैं कि late करते हैं. That is the point. And the last is that since the human mind is biased, you grow old, you have bad times in your life, there are a lot of problems that a human is susceptible to. But if you have a quant system, numbers, they never lie for me. If you have a quant system and a set of rules which improve by the time, they are not, sacrosanct, they improve by the time, and you have to put in your 100%. You have to have multi-factor models in it, not unifactor models. And when they work together, they help you not to, succumb to the biases that your human mind or your human body or your human environment will pose to you. They will give you the reality. They will tell you, okay, the markets are seeming expensive to you, but on a multi-factor model, they are not that expensive. Historically, this is the risk-reward ratio, and then you're able to make prudent decisions. Yeah, work hard on your multi-factor models, and then you will surely be able to create, better models in the market. So a combination of all these four today work as a pillar on which the INVASSET AAID is based. So it is just an algorithm. Algorithm is nothing. Your mind also thinks in an algorithm. Yeah. Whenever there is a red light on the street, your mind tells you to stop. It is an algorithm. Yeah. So similarly, if you have a set of rules which improve with the time, that is what INVASSET AAID is. We are not leaving our experience just to us, so that if we may succumb, our team should not succumb. A set of rules that does not let you falter behind.
So can I say it's human plus machine both working together?
Absolutely, absolutely. And I believe human, even if you take the big data, the best of the algorithms in the world, without human, it is nothing. A human plus uh, algorithm combination is what is required in this today's world.
Sure. The other thing, Anirudh, I was checking the data points because at AIF and PMS Experts India, we keep preparing the analysis, the comparison of all the PMSs which exist in India, as to see, because as you rightly said, data speaks louder than the words. So story is one side, ultimately performance matters. And I was astonished to see that you've beaten down the benchmark by almost 2x over the last 4 years. And generally, it happens that you beat the benchmark once in a year, maybe twice, thrice, but 4 years in a row. So, what do you attribute this success to?
Okay, so see, again, let me dwell from the earlier question. Again, the 4 points that we focus on. We never make decisions which are high risk, high return. So we never have to fall back. With high risk, high return, what happens is that you take a decision, and when the decision goes bad, you have to fall back. So we never take high return, high risk, high return decisions. We always focus on capital appreciation. Third, the main point, as I told you, the biases. We were not biased when the old economy run started. It was clear it is an old economy run. The valuations of the new economy are pretty high. Now, in an old economy run, it is either capex or interest rate sensitives. In capex, you have railways, defense, infrastructure, power, or interest rate sensitives. For them to perform, you need to have global growth and global inflation under control. इस बार क्या था, neither global growth was there nor global inflation was under control. So interest rate sensitives particularly were out of the box. The other thing was in capex में क्या कुछ हो रहा है. Generally, in a lot of countries, capex, you will look at the last because countries do not focus on capex. And I seriously believe, had there been any other government in India, this capex theme would not have worked. By chance, as government, with the long-term vision they have, not going into anything politically, but they took the 2.5 lakh rupees capex expenditure that was in 2013 to 11 lakh crore that it is today. This massive capex jump in India has worked wonders for this old economy run. Otherwise, we would not have been where we are. We would not have seen the ABBs and LNTs of the time. Leave aside the mid caps and small caps that have performed. The large caps like ABB and LNT have given more than 100% return in the last 1 year. This is all due to the capex drive that has started. Recognizing it early and then not be biased of not to invest in this particular sector or theme or all has has led INVASSEST to the returns that we have got for our investors. We believe that you need to be totally unbiased at every end. See, because there are 4 type of investment styles. आपको भी पता है, अगर हम 90% को sum up करें जितने भी funds हैं इंडिया में या वर्ल्ड ओवर, it is either value, growth, quality और safety. 4 ही तरह के फंड है. वैल्यू है, ग्रोथ है, क्वालिटी है और पेंशन फंड है. इन 4 में अगर हम बोले तो 90% फंड्स खत्म होते हैं. What we have done is हम कहते हैं we would not associate ourselves to one particular style of investing. We would do all 4. So this is what the INVASSEST AAID does. It encompasses all 4. When the markets are, so we have created something called a greed and fear index. अगर आप देखें तो greed and fear index सुनने में आसान है, but the stock market totally rotates between these 2 words. Greed and fear, and it is finished. The greed and fear is something that the market oscillates between, and one has to determine on the greed and fear index कि हम कहाँ खड़े हैं अभी. In the greed and fear index, when the markets are totally oversold and the fear is at its maximum, क्या होता है कि weak hands they exit the markets. Okay, the leverage hands they exit the markets. Those who do not have conviction they exit the market. But that time, good investors, what will they do? They'll look for bargains. What are those companies which are available at dirt cheap valuations? I remember in 2020, Tata Motors was available at minimum 100 days of price to book since its listing. I would repeat, minimum 100 days of price to book since listing in 2020. Yeah, so that is the opportunities that the markets, they give to you. But you should have a system to grab those opportunities in time because they don't wait. Yeah. So when the markets are oversold, we do value. When the markets they start a new bull run, okay. If for a layman, kab karega? Say the easiest unifactor model, though don't rely on it. The easiest unifactor model is when the markets have hit their new highs. Okay. So when the markets have started a new bull run, there is a belief that every bull run is guided by some special sector, stocks or group. Why? Due to some relative change which is happening in the past. मतलब पीछे कुछ change हुआ है जिसकी वजह से the profits and the top line of the companies are affected, and then that will translate into the stock price. So every new bull run will have new leaders. Stock हो चाहे sector हो चाहे group हो. You have to recognize these sectors, stocks and groups, and that is how you have to recognize what the change is, how big the change is, and how will it translate. For example, the way we did defense, we bought Mazda at 600 rupees. I still remember. Today at 4,200, we are holding it. Yeah, because the relative change that happened was immense. But the stock is not, I would not say that it is totally performed and it is at the end of the cycle for us. Quick disclaimer here, any stock sectors or groups that we talk about are not a recommendation to buy and sell. Please consult your financial advisor. And all this, I believe the PMS AIF expert seminar is all for educating the investors and not recommending stocks to buy and sell. Yeah. So my point is, that you have to see what has changed and recognize and act on it in time, and then live the entire journey with it. And finally, when we believe that the markets are now turning expensive, now we believe that among the growth, let's not totally focus on growth. Now go into companies which
I was coming to that. That was the second question, if you allow me.
Okay, I'll display this framework so that I am able to give a conviction. So value to growth. Now growth to when the overall markets they become expensive, we go in for something called quality investing. So what is quality investing? Say quality investing ये बोलती है कि let's so every decision has to be based on risk reward, right? Now the markets are expensive, तो हमने markets में क्यों रहना है? Markets can be expensive for a very very long period of time. December 2017 to January 2020, the markets were expensive only. Didn't they deliver returns still? And they delivered very good returns. They delivered returns of around 15 to 18%. And when the downfall came, the downfall also came around 15 to 20%. So one has to make sure that in the third stage when you're investing, it is 15 to 20% upside per year and a 15 to 20% downside from here. That is the quality phase. And finally, we have all seen 2008, we have all seen 2017, we have all seen the dot-com bubble and the Harshad Mehta bubble. There comes a time where people start leaving their jobs. There comes a time where the average housewife says, I'm a stock market trader. So that are the times when you should avoid the markets for a bit, or there are beautiful products available in the market. There are hedging, long-term hedging puts available. Then, futures and options are wonderful products if you use them for the right thing. If you use them to hedge your portfolio, they are beautiful products. But the problem is that human mind succumbs and, easy leverage, and people use them for leverage trading. That you should not do. But they're wonderful products if you use them for hedging. Or when the markets have become expensive, you can, it's okay to take a breather, sit out of the market for some time, and, maybe invest in alternate assets like gold and US dollar, which act as a measure of safety. So, yeah, we are a combination of it, but totally driven by data. The fund manager does not take a call on what to do. A fund manager here takes a call on how to improve the algorithm by the time, rather than questioning the results of the algorithm. And that has really helped us in creating the wealth for our clients.
Sure. So it's basically an amalgamation of the value, the growth, the contrarian approach, the quality, and at times themes also. Is that correct?
Yeah, these are generally captured in the growth phase. When you look, what is the theme, Vikas ji? एक चेंज हुआ. अगर आज हम बोलते हैं कि डिफेंस की थीम चली है 2000 में, बोलते हैं क्या उसकी थीम चली थी आईटी की, कुछ चेंज हुआ, something new came up. Internet came up in 2000, in the late 90s and 2000s. Today, the capital expenditure has gone up in the investment scenario. So some relative changes happened, and now you see who are our benefits, who are the biggest benefit, कहाँ पे सबसे ज़्यादा need है, and then you will be able to recognize the right companies.
Yeah. So my next question is, the growth journey is going on, the bull run is going on, and couple of themes have already been played out in your portfolio. So is this a good time to invest? What is the risk reward ratio?
See, first of all, answering the first part, that couple of themes have played out. I believe that the relative change in their favor is too much, and the themes today have not played out. The easiest I try to, for my team, I try to sum it through easy examples. That घर में जब एक बच्चा when a kid is born in a house, and you cannot determine the money spent on the kid divided by the number of, divided by his age. Initially the kid's expenditure per kg of weight would be maximum. Similarly with the new companies, you cannot go on their initial multiples. Look at what the multiples will be 5-7 years down the line. Though it is very easy to say that, but markets in the long run would reward only those companies which will have maximum growth. Markets are only crazy about growth and relative growth. If you are able to shift between these two terms efficiently, then a lot of money can be made. My funda is very, very clear. When it comes to can investors invest with INVASSEST PMS currently? I believe yes. There is a very, very simple thing. Currently, whenever a new investor approaches us, we invest around 97 rupees in the stock market, and with the 3 rupees that are left, we hedge their portfolio. So now, if the markets rise from here, our beta is 1.5, we will rise 1.5 times. But if the market falls, since we are hedged, we would not do that bad. So I believe from here, our risk reward guidance, if I have to sum it, though no guarantees at all, I believe we will be able to do 18 to 28% per year CAGR for a few years, while protecting the downside to below 20% temporarily.
Can you hear me? Yeah. So 5 minutes to go. I have two more questions if you allow me. So the next question is, generally there is this perception amongst the investor community as a whole is that when you approach the quant investing, it's about churning, buying the same stock, and covering it up when it is falling down, etc., etc. But what is your churning ratio of last 4 years, the average churning ratio?
See, if we talk about the last 4 years, we did the growth phase in July of 2022. Sorry, the value phase in July of 2022. Then the growth phase started in November 2022. We held the same stocks in same proportion, not even a single stock changed till January of 2024. So good for 1 year and 2-3 months. We were totally holding a particular types of stocks, and I'm proud to say that 90% of my investors, with 90% of their portfolios, were in long-term capital gains during this period. After that, we did a change where we felt that the markets are expensive and we need to enter quality. But then again, we realized that it was a mistake, a small mistake that we did. So what we did was we went back to growth. We know that the opportunities growth in this time is too much, and we hedged our portfolios along. So I believe in terms of quant investing, we have one of the lowest churning rates in the industry, with the not more than 25 to 30% of the portfolio changing within a month. So I believe if you approach quant with a long-term vision, then the churning can also be brought down much less than the active long-only funds that are out there.
Sure. So my last question, 2 minutes left out. If you can shed some lights on what kind of sector that you think looks to be appealing going forward from a fund house, your views as a house on those things.
See, my bias towards capex is very, very clear. I have repeated it again and again. Railways, defense, infrastructure, power, they are the main themes for us. But then going forward, there's an amazing premiumization drive going throughout the world. I mentioned it again and again. The business class tickets are being sold out much earlier than the economy class tickets. Railways are the railway seats will be sold out. The airplane economy will be sold out before the railway tickets. So this is a phenomena that is going on. Luxury houses will be booked at day one, while other houses will take some time to sell out. So yes, premiumization is one thing. All of you can see where you have started spending more and where less. And then I believe the wonderful thing that has happened for the entire world is the US Fed, which is, I believe, is the father of, if US has inflation, it is the inflation for all of us because we are all backed by the dollar, US dollar. And then I believe that the inflation is not a problem anymore. Rate cut is just an event somewhere in the future. The market has started discounting it. So I believe international metal prices should rise. We are bullish on the metal sector as well. And again, an implication of this is only those people who will be able to pass on the increased prices of commodities to their customers in a easier way would benefit more than others, those who would not. So these are the sectors I believe should lead the market for the next couple of years.
Great. It was pleasure speaking with you, Anirudhji, and on behalf of entire AIF and PMS Experts India team, I take this opportunity to congratulate you for delivering the deliverables at the end of investors. All of them are very happy about it and continue
Vikas,
to do so.
and I thank you, Vikasji, for taking so much effort to educate our investors. And I believe PMS AIF PM Experts. I wish you all the very best, and I believe you'll have a very great future. Thank you.
Thank you.